Welcome to the BitcoinTV Chinese channel. I'm Michael, and you're now watching our special National Day program. We're taking advantage of the holiday to talk about Ethereum. If we move this topic to 2024, you can sum up just how many factions, influencers, and perspectives there are out there criticizing Ethereum, saying it's finished, that gas fees are sky high, that killer apps are nowhere to be seen, that enterprises aren't willing to pay, and even quite a few friends around me have started to clear out their Ethereum holdings. But in 2025, the situation for Ethereum has completely turned around.
This year, Ethereum pulled off a triple jump. Early this year, it hovered between $2,300 and $2,500. In March, it broke $2,500. By June, driven by institutional capital and financial planning, it soared to $4,188, with its market cap nearing $600 billion. In July alone, it surged 48.73%, with a net ETF inflow of $3.7 billion, reaching a cumulative total of $11 billion. By September, Ethereum remained steady in the $4,400 to $4,700 range, an increase of over 200% beginning of the year, making it one of the most outstanding mainstream digital assets of the year.
So if you've been following our channel, you'll know that throughout 2024, we've put a lot of effort through live streams, Twitter, and our daily reports into discussing Ethereum. Ethereum remains the leading infrastructure in the blockchain sector, and so far, no one has been able to directly challenge it head-on. Ethereum is no longer just the foundational infrastructure that everyone used to talk about. It has become a super hub in the digital economy, a playground for developers, and a strategic asset fiercely contested by global capital.
At the end of June, the US-listed company BitMine launched its Ethereum Treasury Plan and bought 13 in just 10 hours. With the purchase of 50,000 Ethereum, their total holdings surpassed 1.3 million coins. Chairman Thomas Lee declared that they aim to hold 5% of the world's Ethereum. During the same period, the price of Ethereum rose from $1,385 to $4,788, and daily trading volume increased to the $4.5 to $4.9 billion range. Wall Street analysts refer to it as digital oil.
No one could have imagined that BitMine would take the top spot in global corporate Ethereum holdings in just 35 days. This company, which originally had no presence on the Nasdaq, relied on its initial financing and 3 rounds of continued increases to increase its holdings from 0 to 830,000 Ethereum in just 35 days, surpassing the original Ethereum. BitMine's approach is typically Wall Street style: high leverage, fast-paced speculation, buying and storytelling. ShopLink, on the other hand, continues the style of old European dramas, emphasizing slow accumulation and long-term value. However, ShopLink, forced by BitMine in the current market, has begun to shine with an official announcement that it will issue $400 million in bonds. Directly purchasing Ethereum would push Ethereum's treasury to over $3 billion. Why is ShopLink so aggressive? Because its chairman, Joshua Rubin, is the co-founder of Ethereum. So, while this seemingly clash of two companies is actually a battle between two European-style defenders, one is the defender of the old European drama, while the other is Wall Street vying for pricing power. So who will come out on top? If BitMine represents a sudden aggressive capital invasion led by Wall Street, then ShopLink is like the old European drama of slowly accumulating strength and holding. If we break down ShopLink's lineup, you'll find that it covers almost the entire capital chain of the Ethereum ecosystem.
ShopLink's first type of capital comes from the Yuan-Shu Tong camp. Consensus, founded by Ethereum co-founder Joseph Rubin, controls Mad Max and Infura. The former has over 30 million monthly active users, while the latter supports thousands of dApps. Rubin himself is also the chairman of ShopLink's board, giving the company a built-in synergy and a lifeline to safeguard long-term value. ShopLink's second type is the infrastructure camp, which mainly includes Pantera, Arrington, and Primitive. Pantera is involved through Arbitrum, Starkware, Arrington, Yaju, N, and Sushi. Primitive focuses on derivatives and liquidity management. These investments give ShopLink deep synergy in scaling and DeFi, making it more stable compared to Wall Street's fast money capital. The third type is the financialization camp, represented by Galaxy Digital, GSR, and Undo Finance. Galaxy provides investment banking and derivatives services, GSR ensures liquidity, and Undo brings U.S. Treasuries and corporate bonds on-chain. With these structures, ShopLink's treasury can not only preserve value, but also hedge risks and earn RWA, real-world asset yields. So, while not aggressive, it is more stable.
Why do people say ShopLink has a distinctly old-school style? It's because their Ethereum holdings have never been accumulated bit by bit through public or secondary markets. So where do they buy from? Directly from team wallets and internal channels. Usually the purchase volumes aren't very large, but the process can last a long time. Moreover, ShopLink places special emphasis on security and liquidity, so every acquisition is accompanied by strict audits and approval rights. This makes ShopLink, in the eyes of institutions, look like an elder slowly accumulating Ethereum, and it's even regarded as a guardian of Ethereum. In the current blockchain landscape, this pace is clearly on the slower side.
Based on financial reports and on-chain data estimates, ShopLink's Ethereum acquisition costs are mainly concentrated in the $1,500 to $1,800 range, with some early holdings even below $1,000. In other words, when the price returns to $4,000, it's almost inevitable that there will be natural selling pressure. What's even more crucial is that as early as June 12th, ShopLink submitted a registration document called ASR. Once it takes effect, the company can initiate stock sales at any time.
So, the safety of this strategy itself is beyond reproach, but it also comes with three inherent weaknesses. First, there's an overly strong hoarding mentality. They care too much about cost and return ratios, so when the price surges significantly, there's a tendency to cash out in the short term. Second, information dissemination is very slow. The circle of shareholders is relatively closed and not good at storytelling or creating market sentiment. Third, the pace of disclosures lags behind. Although they place great emphasis on on-chain security, when it comes to financial reporting and communicating with the capital market, they're always half a step slower than BitMine. That's precisely why, by the third quarter of this year, when everyone saw BitMine quickly making inroads through financing, position disclosures, and a centralized narrative with one-stop services, ShopLink always seemed to be half a step behind.
In contrast, BitMine has aggressively entered the Ethereum ecosystem with a classic Wall Street capital approach. First, the PIP easy financing design itself is a textbook example of financial engineering, using a combination of cash-weighted certificates and Ethereum subscription structures. Behind this are top-tier participants like Galaxy Digital, ARK Invest, and Founders Fund, among others. The structure combines the steady style of traditional hedge funds with the high-risk venture capital approach. The distribution of tokens is transparent, and the lockup period is cleverly arranged, not only to stabilize the valuation model, but also to create psychological expectations of safety and scarcity in the capital market.
In fact, just by looking at the backgrounds of the board members, we can see BitMine's ambition. Almost all of them come from investment banks, private equity, or hedge funds. For them, financing, refinancing, and rational cashing out are second nature. In their eyes, Ethereum is no longer just a digital currency, but a financial asset that can be priced, traded, and quickly monetized through financial reporting narratives. That's exactly why BitMine is employing a capital market strategy, frequent disclosures, amplifying narratives, and leveraging these to move prices in the secondary market.
According to the data, as of July 1st, BitMine held 0 Ethereum. By August 5th, they disclosed holdings of 833,137 ETH. In just 35 days, this company went from being a nobody to becoming the world's largest Ethereum treasury company, directly surpassing SharpLeague.
In this competition, there's no doubt that SharpLeague's old-school OG style has fallen behind. Sticking to the traditional method of hoarding coins makes it hard to keep up with Wall Street's lightning-fast capital narrative. This also forced SharpLeague to bring in Wall Street investors on August 7th, raising an additional $200 million, which is essentially an indirect admission that the stage for Ethereum's pricing power no longer belongs to the old OGs, but to the masters of capital market storytelling. In the future, BitMine may not necessarily dominate alone, but who will lead the narrative around Ethereum's pricing next will depend on who is better at stirring up excitement, telling compelling stories, and igniting the emotions and hot money of Wall Street.
Bitmine's accumulation is precise, with disclosures weekly. In the first week, July 1st to 7th, BIP easily raised $250 million purchasing about $150,000 Ethereum. From the 8th to 14th, they added $266,000, totaling $560,000. From the 15th to the 21st, they added another $270,000. With an additional $20,000, the cumulative total exceeded $830,000. This frequent disclosure goes beyond simply selling coins. It's a tactical combination of capital infusion and momentum building.
So as you can see, Bitmine's bold moves have completely shattered the old tricks of treasury companies. They don't wait for your financial reports or audits. Instead, they're constantly making announcements on their official website, in the media, and on social platforms, almost afraid you won't know they're the institutional big brother. And the key is, their purchase price is truly unbeatable. The average holding price is $3,491, successfully bottom fishing at a low. As a result, in July, the stock price was $4, and in August it shot up to $41, a nine-fold increase. The market cap jumped from $200 million to $3 billion. If that's not cheating, what is? What's even more impressive is that every time they update their holdings, not only does their own stock soar, but even Ethereum spot prices rise along with it. The market has developed a conditioned reflex. Bitmine stock equals a rise in Ethereum's price. The mastermind behind this grand show is Thomas Lee and his Wall Street Capital team. They've used storytelling and real capital to turn Ethereum into the superstar of 2025.
Tom Lee, co-founder and head of research at Fundstrat Global Advisors, is a key figure connecting Wall Street and the crypto market. He's adept at interpreting macroeconomic data and even better at crafting compelling narratives, making bullish trends sound both logical and persuasive. Tom Lee didn't become famous for the accuracy of his predictions, but for his frequent commentary and strong storytelling skills. There's a saying that circulates among insiders: Tom Lee may not always be right, but he's always the first to speak up and the loudest voice. So much so that you simply can't forget what he says, even if you try.
Actually, Tom Lee himself is worth dedicating an entire series of episodes to, because I think he's not just a market forecaster, he's also extremely skilled at creating belief. He doesn't just say Ethereum will go up, he builds an entire logical framework to justify the rally. For example, he explains what solid macroeconomic factors are driving the rise, whether Ethereum could become the new anchor among tech stocks, and how Bitcoin is like gold, while Ethereum is more like oil. More importantly, he upgrades outcome-driven bullishness into a value system driven by conviction. If we look at the rise of Bitmain, we can almost always see Tom Lee's rhetorical imprint. For example, how much Ethereum each stock holds, the Ethereum content behind each share, using structural indicators to package fundamentals, using cyclical narratives to explain the logic behind price surges, and using institutional entry to justify the risks of buying at high levels. This kind of narrative not only drives the positive resonance between Bitmain's stock price and Ethereum's price, but also gradually shapes a market consensus that Ethereum's value re-rating must be repackaged and reinterpreted through the language of Wall Street capital before it can be realized. So, in 2025, the price surge of Ethereum and Wall Street's repackaging with money, language, and capital are inseparable.
Tom Lee's narrative effect has already spread to the Asian markets, with Korean retail investors serving as a typical example. According to data from the Korea Center for International Finance, KCIF, in the first half of 2025, the proportion of crypto-related stocks among the top 50 stocks bought by Korean investors rose from 5% in January to 5% in June, and although it fell back to 5%, it still remains at a high level. Bitmine Emergent Technologies has become the biggest winner, with Korean retail investors increasing their holdings by a total of $259 million since July, making it the most purchased overseas security by Korean investors that month.
Even the most steadfast Ethereum holders probably never imagined they would see a moment celebrating the one-year anniversary of Ethereum's listing in the United States. On July 23rd this year, it will be exactly 1 year since the Ethereum ETF first started trading on July 23rd, 2024. Not only has it weathered a lukewarm start, but now thanks to the resonance of capital narratives, the Ethereum ETF is truly experiencing its moment in the spotlight.
This June, the Ethereum ETF recorded its best single-month performance in history, with net inflows exceeding $3.5 billion, 70% higher than the previous record set in December 2024. The data for July already shows a trend of surpassing June. So far, there have been over $3 billion in net inflows, and as of July 18th, it has marked the highest 2-week net inflow in history, with 10 consecutive weeks without any net outflows, something that has never happened before in its 52-week history.
I think in May 2024, US regulators approved the trading of Ethereum ETFs, which officially began on July 23rd. However, the market reaction was lukewarm. Everyone thought, we already have a Bitcoin ETF, so why do we need an Ethereum one? At first, there was little interest in the price and volatility was low. What was even more awkward was that in the first few months, there were actually net outflows from the ETF. But now things have changed.
This year, Ethereum's underlying infrastructure continues to upgrade, addressing performance bottlenecks. The Petra upgrade, launched at the beginning of the year, brought 12 key improvements, effectively a major stock swap. EIP 7702 brings smart contract-level capabilities to ordinary wallets, supporting gas defoo and account repair, significantly lowering the user threshold. EIP 7251 raises the EDH limit from 32 to 2048 EDH, improving node communication efficiency by approximately 3 times and making institutional large-scale transactions run more smoothly. These improvements provide a solid technical foundation for ETF inflows, institutional transactions, and high-frequency applications on the chain. RWA, one of the hottest stories of the year, is a key factor in this. A full-scale explosion of traditional assets such as U.S. Treasury bonds and real estate exploration has led to a massive surge in the size of the Bilio Fund, exceeding $2.4 billion, with over 90% held in Ethereum. Furthermore, DeFi is opening up new possibilities with AI agents automating lending and strategy optimization, attracting 100,000 traditional developers. Total DeFi locked-in assets reached $85.9 billion in July, a 3-year high, 60% of which is held in Ethereum. Ethereum continues to consolidate its status as a stablecoin, with 54% of all stablecoins circulating on Ethereum. Every transaction burns Ether, making it increasingly resemble the origin of the digital world.
Unlike Bitcoin, which is positioned as digital gold, Ethereum has attracted major institutions mainly due to 3 core strengths. First, it offers staking yields. Ethereum can generate an annualized return of 3 to 5% each year. Especially in the context of the Federal Reserve cutting interest rates, this is much more attractive than US Treasury bonds. Second, its compliance is clear. The EU's MiCA regulation has already recognized Ethereum as a compliant standard. Third, its ecosystem is overwhelmingly strong. Ethereum boasts over 5,000 active decentralized applications and 500,000 developers, creating a formidable moat. This scale is more than 5 times that of competitors like Solana.
In response, Tom Lee, founder of Fundstrat, stated that the fair value of Ethereum should be between $10,000 and $15,000. He also called it the biggest macro trading opportunity of the year. This year, Ethereum's price trend started high, then dipped, and moved upward in a volatile manner. At the beginning of the year, it hovered between $1,350 and $1,500. With the QE impactful upgrade and ETF inflows, it broke through $2,500. In quarter 2, driven by expectations of a Fed rate cut and Bitmain increasing its holdings, it reached a new all-time high of $4,788. The QE impactful upgrade and ETF inflows pushed it past $2,500. In quarter 3, liquidity tightening and a bumpy upgrade triggered L2 fee reduction effects, causing the price to fall to the $4,000 to $4,200 range. As of the end of September, it first reached $4,400.
Ethereum's landscape for the year is transforming. Technical upgrades and institutional bottom fishing mark a symbolic shift from a speculative asset to a strategic upgrade this year. However, the road ahead for Ethereum has concerns. If the Federal Reserve tightens rates again, if Trump administration's regulatory efforts fall short, and with Solana and L2 siphoning Ethereum's traffic, challenges exist. From October to year-end, remember, Ethereum's support is between $4,000 and $4,200, while resistance is at $4,800 to $5,000. Optimistically, Ethereum could break $5,000, $6,000, or even reach $7,000. Pessimistically, a pullback to $3,500 or $3,800 is possible. In the future, Ethereum's major players will change. After 10 years of accumulation, Ethereum is shifting from sentiment-driven to a new pattern of technical upgrades, institutional bottom fishing, and policy resonance. Future major players will no longer be traditional OGs, but new Wall Street giants who control capital, have long-term narratives, and drive real-world adoption.